Welcome back to Hughes Group Jax. I'm Wendy.
And I'm Alia.
And we have some customers that have been asking us questions about how they can tap into the equity they have in their home. Alia, tell us what we're doing today.
So we're doing things a little differently today to make sure all your questions about your equity options are answered. We did an interview with Alex at Bank of England. As you know, we're the real estate experts, but we wanted to partner with a lender who had the information on maybe a refi, HELOC, just some other options that you have to make the most of your equity. So let's get into the interview. So we have some awesome clients that have been reaching out to us about what they can do with the amazing equity that they've built up in their homes, and they're not necessarily ready to sell. So what are some of the things that we've been talking about, and what questions do we have for Alex?
So they're asking about, well, how can I tap in, like you just said,
Right.
and how does that affect my monthly payment? How does it affect my monthly overall mortgage? Is it one mortgage or is it two mortgages? And so we were like, you know what? We're the ones who can help you find a home and sell your home.
Right.
And Alex is the one who could answer all the questions about mortgages and how it affects you. So Alex, thank you so much for joining us today. And please tell us about how our customers can, if they're interested, understand about how to benefit by the wonderful equity that they have in their home.
Absolutely. Yeah. Thanks for having me. So this is becoming a more and more common question as we have found that there are trillions of dollars of equity in the United States right now, which is crazy. And that's an important point for us to just think about for just a second, because everybody who's worried about a crash, if you go back to 2008, Wendy, how much equity do people have?
They had negative equity.
Right. They were borrowing up to their eyeballs. Everybody now has equity all over the place. And the hard part is it's like this wonderful wealth that they have, but they can't actually touch or get to or use. But first and foremost, anybody worried about a crash, at least from that Stangard, we're not going to have foreclosures everywhere, because guess what? People have equity. They're going to sell their house and they're going to make money and walk away from it, rather than, hey, I've got no skin in the game, I'm just going to let a foreclosure happen. So that's the first thing to sort of think about when it comes to this equity. But really, there's about 3 ways that you can get in touch with your equity to use it. First and foremost, the easiest way is selling. I mean, that's not necessarily the option that a lot of people want, but what people are finding is that's sometimes the most practical option. Because getting a new loan or an additional loan isn't always the easiest thing. So selling is a way that a lot of people are ultimately having to turn to capture that equity. And then they're able to, put it either towards debt that they have, or put it towards the next house to make it more affordable. But the other 2 options are either cash out refinance, which could also be called a debt consolidation loan, depending on the reason why you're needing your equity. We see stats now that say that, credit card usage is hitting all-time highs. And so what that's resulting in is a lot of pressure from homeowners to say, well, I charged on my cards, I got to this point, but I do have a way out. I just have to get that equity. And so either they're going to sell their house, or they can do what's called a cash out refinance. Now, the hesitation about doing that is it replaces their ultra low rates that they got from the 2020, 2021 timeframe with the current rate, which can be a little bit much for people to consider. But when we run numbers for people and show them, yeah, your house, 3% interest rate, fantastic. But when you add in all your credit card debts and your car loans and all the other loans that you have and the interest you're paying on those, you actually will get ultimately a better financial position, a lower interest rate overall, if you did a cash out refinance and paid all that debt off. If you can be debt free outside of your house, not only are you sleeping better, but you're paying less overall, because those credit cards, man, every time the Fed raises the rate on those credit cards is going up. The rate on your car loan, if you were to get a new car loan, is going up. All that short-term debt is going up. And the last way, which tends to be the most common, is a home equity line of credit, otherwise called a HELOC. This is something that a lot of people call us about. They want to get. We go through sort of how it works. We explain that it, in essence, is a credit card on your house. It is a second loan in addition to the mortgage that you have that is accruing interest daily, meaning, the interest is going to be higher. The interest rate is typically variable. So you may start off with an introductory period where it's fixed, but after that, it's going to change. It's going to fluctuate. And typically that means it's going to go up. And you only make interest payments on it. So typically when you have those payments and you make those payments, you can pay on these things for 10 years and you turn around and you owe the exact same amount of money as you did when you first took it out. So when people hear that, the shine of that product can sometimes wear off. And, you're going to start to get these in the mail. I've started to get them advertisements for HELOCs where they'll tell you, the rate is between 5.99 and 18.99. So it's just one of those things where if you're a consumer, you got to be careful. You got to look at the terms. And what we're doing for a lot of our clients is we say, look, go get terms on a HELOC because it's not something we offer. It's something we can talk about, but not something we offer. Let us know a rough estimate of what you can expect. And let's look at a cash out and let's just run the numbers and see what's better for you. If you just need 20 grand, HELOC's probably a great option. If you need like 60, 80, 100 grand, you need to start looking at a cash out refinance more seriously to be able to pay that debt down.
Wonderful. Wonderful. So on a cash out refinance, let's say their house is worth 500, they only owe 250. Could they get 250 or what's the loan to value ratio?
Yeah, that's a great question. So they would pay off their existing loan. So in that case, 250 of the new loan is going to go to pay off the old loan. And then they can get a total of probably 75 to 80% of the value of their home. And what would happen is an appraisal would be done, and then that would set the value. You can multiply that by 80%, subtract out what you owe on your current mortgage, and that's a rough estimate of what you could get out of a cash out refinance.
Okay. And then since that's like a regular mortgage, you're going to have closing costs associated with that, correct?
Yeah. So you're going to have closing costs with most anything. When I was looking at that HELOC offer I got, they said you can get a higher rate and have less closing costs, or you can get a lower rate and you'll have closing costs. And yeah, that's the same thing in regular loan world. So you do have closing costs, but the good news on a refinance, unlike a purchase, everything can be factored into the refinance, it can be rolled in. So there's no out-of-pocket cost, which makes it a little more easy to both process and manage financially as a family.
Right. Wonderful. Well, I just want to say thank you so much, Alex, for kind of going to this a little bit for us, and to all of our customers. And if you're seeing this out here on social media channels, is we would love to help you sell your home, or if you want to buy a home. And Alex is the one to reach out to have any questions about financing, because we're all professionals, and we like to stay in our lane so we can make sure that we can offer you value and the correct information, because we say that information is power, and so we want you to have the information so you can make wise decisions for you and your family. So thanks so much, and either send us a message, you can reach out by phone, and let us know if you have any more questions.
All right, thanks guys.
Thanks.